In the foreign exchange or forex market, currencies are always traded in pairs because trading involves buying one currency and selling another simultaneously. Therefore, exchange rates are always quoted as one currency relative to another. Let's take an example with the Euro-USD pair, which represent the euro against the US dollar. In forex markets, we use three-letter codes. EUR stands for euro and USD stands for US dollar. Suppose we see a code like euro USD equals 1.4745, 1.4746. What does this mean? In this pair, euro is base currency and USD is a code currency. This code tells us how many US dollar it takes to buy 1 euro. The numbers are expressed in terms of USD per EUR. That is, you can sell 1 euro for 1.4745 or buy 1 euro for 1.4746. So why are there two different prices? Because of the bid-ask spread. The bid is the price at which you can sell the base currency, that's the euro, and the ask price is the price at which you can buy the base currency. This concept is not unique to Forex. It applies to the stock market as well. For example, if Microsoft has a bid of 187.02 and ask 187.03, you would sell at the bid price and buy at the higher ask price. The difference between the bid and ask is called the spread. And this is how the market makers like banks or brokers earn a profit. They stand ready to buy and sell, providing liquidity to the market. In Forex, banks often act as dealers. They sell from their currency inventory at the ask price, for example, 1.4746 USD per EUR, and buy at the bid price, for example, 1.4745 USD per EUR. As traders or customers, we do the opposite. We buy at the ask price, that's 1.4746, and we sell at the bid of 1.4745, that's the lower price. So basically, for us, we buy high and sell low. And the difference is the bank's profit. For the bid-ask spread, as we know, at any given time, the ask price is always higher than the bid price. And we call the difference of we call this difference the bid-ask spread, which is often calculated as ask minus bid divided by ask. That's the difference divided by the ask price in percentage term. Let's work on an example here. So we have Utah banks, and its bid price for Canadian dollar is $0.7938, and its ask price is $0.81. So what is the bid-ask spread in percentage? Well, here's how we figure it out. We apply the formula. So first, 0.81 minus 0.7938. So we get the difference. And then we divide the difference by the ask price of 0.81. And we'll get 0.02 or 2% for the answer. So this spread reflects the transaction cost for traders or investors and the dealer's compensation for making the market.